Let's talk about the Fed. I think there's not a lot of suspense here about what they may do. I guess there is more suspense about what they may say. Once we get this move out of the way, do you think stocks may find some footing? In other words, rally because, well, at least that one's over.
Yeah, well, it could. Certainly, we could see a relief rally. I mean, we're down so much into it, right? But unfortunately, Tyler, the unknowns don't go away, right? The Fed may raise 50, talk more hawkish. They may do 50 again the following meeting and then 50 the following meeting. But we just don't know the outcome. And quite honestly, I do not believe that even if you did 350s in a row, that's going to help to improve inflation. Supply chains are going to help improve the inflation picture. So I think inflation is here to stay, and it's going to remain elevated. That, and then we have the wars. So all this unknown has led to multiple contraction, right? Because the irony of it all is earnings are actually going higher. That we've had 75% of the companies beat expectations, right? And net estimates are going higher, but multiples are coming down because, again, the unknowns. This is kind of normal. Could we get to 16 times? We're at 17.7 times now. We certainly could. I wouldn't be surprised. But I am looking for stocks that sell off in the wake of all of this. And I think there are some opportunities if you're longer term.
We will get to them in just a moment. Right now, the Dow at session lows off more than 400 points. You know, this is a sticky time, not just it's for consumers as well. You've got rising prices, you've got falling wealth, you've got rising costs of everything, including the cost of money. And then, as you point out, you've got all kinds of exogenous factors like the shutdown in China, like the war in Ukraine. Is it time to declare the great bull market dead? And does it matter? I
don't know if it matters. I was really encouraged to hear Brian Moynihan talk about how strong and resilient the consumer is. And I think the consumer is going to hang in there. Maybe it's not going to be to the extent it is right now, but the consumer is 70% of U.S. GDP, and we have seen an absolute explosion in services. And services is 2/3 of consumer of consumption. And so you're rooting for the consumer. We all are, right? And the job market is hot as can be, and wages are still going higher. So I think the consumer can handle higher interest rates. But again, it's that unknown as to does the Fed overshoot, because we know they're so behind the curve. So there's so many questions, Tyler. But I don't think the bull market is dead, because I don't think the Fed is going to be able to do as much in terms of raising rates as they say they are.
Let's get to a couple of the stocks that you want to talk about. I'm going to go in reverse order because the number one, Expedia, is one that a lot of people have talked about. It's a basic reopening play. But I'm going to go to Zoetis. It's the animal health stock. You say you have 4 pets. They cost a lot of money.
They do cost a lot of money. So they did this survey of 16,000 pet owners, and 86% of the people said that they would spend at any cost for their pets. This is a $42 billion market, and it's growing at 10 to 15% per year. And these guys, Zoetis, they actually have the product differentiation. They have technology that they're implementing, a great balance sheet. They're buying back stock. They're doing all the right things. Only problem, Tyler, is it is expensive at 34 times earnings. But I view it as more like a staple stock. And so if it were to pull back, it's already down 27% on the year. If it were to pull back more, I would buy more. I own the stock, in full disclosure.
Let's go to Starbucks, and a quick thought finally on Expedia. Starbucks, obviously a kind of a turnaround. Schultz is back, but now on his agenda are serious issues of labor restiveness.
Yes, he has a tough job ahead of him, but it's Howard Schultz, right? So it would be playing for him to turn this company around. My biggest question, Tyler, is what are they going to do with that $20 billion buyback that they just suspended? Where are they going to put that? They're going to really reinvent themselves again. I know they have to get food right. They already got drink right. So now it's can they manage strong U.S. same-store sales versus international China issue supply constraints and that sort of thing. So it's a real mixed bag, but it has down 36% on the year. So I think it's starting to get interesting.
All right. Stephanie, thanks very much. Stephanie Link, we appreciate it. The strongest link.
Thanks, Tyler.
Bye.